All right, so we're going to be talking about currency futures as we've been going along. The people I'm working with have all been telling me that they have a definite preference for the currency futures over anything else, even over the index futures, because they can adapt to a smaller account or a bigger account and it gets extremely good returns. So we've been focusing a lot more on the currency futures over the last year or so and really enhancing the currency future strategies. And you're going to see more of those enhancements coming up over the next few months also. Um, and Bill asks, what is a process for selecting valid trades? It's exactly just going through the strategies. Um, let's take a quick look here first. Here's a disclaimer, first of all, on what we're doing. Everything we're doing is for informational purposes, only for educational purposes. I'm not giving any trading advice. So what I'm showing you is how myself and Becky, who is the co-host and my trading partner, most of you know her, and it is how we profit from the markets regularly, how we've been doing it for almost 20 years now. Wow, time goes by. We started in 2005, and I was able to leave my full-time job in 2009 to be able to trade for a living. So trading has been very good to us, but it's all been almost 20 years now. So time is going by quickly, too quickly. So I'm going to show you how we profit from the markets using currency futures. And a question from the process. Let's get right into the charts right away. And everyone here, except maybe Connie, might be familiar with, okay, here are the future strategies with the futures contracts which we trade. Only these, none others. There are others available, but what some people may not realize is to have a good chart you can use is not so simple. Um, and having a continuous chart is really challenging when you have overlapping contracts and more than four contracts. The charts become very challenging to work with. And that's something we can talk about later time, but these are the ones that are easiest to work with the charts to give us the most reliability and overall best results. And we're going to be looking at the bear attack currency future sell, but I'm open to anything else you want to look at, since, like I said, everyone here is right now is a coaching client. So if you want to look at something else, we can pull that up and look at it also. So Bill asked, what's my process for looking at trades or for selecting valid trades? All right, I'm going to switch over to the chart. I'm going to change the share. Okay. You should now be seeing the chart. And this is Australian dollar. I'm going to change this chart. Template, load, and I'm going to pull up the Danshin Index Futures template. When I pull up this template to answer Bill's question, I just look for a valid trade. I know on this template, I'm looking for the double D swing currency futures buy, and I'm looking for a D2 swing currency futures sell. Okay, I know on this one. So when I pull this chart up, I know there are two strategies that go along with this chart. If I'm on this day, I know I have no D2 swing currency future sell. I just look at it because I'm looking for a close below this level. This day, nope, no D2 swing currency future sell. Takes me a whole 3 seconds to determine I don't have a close below this previous swing low right here. This day, nope, no D2 swing currency future sell. I'm also looking for a currency futures buy where it goes up and closes above a certain level. There is no buy here. So I'm looking for two strategies at the same time. Takes me literally 5 seconds to see, nope, no trade valid. Nope, no trade valid that day either. Nope, no trade valid. Nope, nope. Yeah, it's getting close. Not yet. Hey, wait a second. I have a trade valid. That's how that's how we look for valid trades. And when I pull this template up, I know there are two strategies that use this template. It's a buy side trade of a similar nature looking for a close above a previous swing high. Didn't happen here. And I know for the sell side, I'm looking for a close below this swing low, this value right here. It happened right there. So that would be my signal day. And I just do that for every template and every chart. Excuse me, for every strategy. That's it. For me personally, it takes me about 10 to 15 minutes at the most to go through. Half the time, I don't even have to look at every strategy because I know the way our strategies are set up. If it's a down day, there is no long trade valid. And if it's an up day, there is no short trade valid because with the currencies, it has to be a down day for it to be a valid sell, and it's been updated to be a valid buy trade, long trade. So I can review really fast because we always have those days where everything went up, everything went down. That's half the strategies you don't have to look at because if everything went up, if all the currencies went up today, then I don't have to look at any of the short strategies at all because none are valid. And if it was one of those days where all the currencies went down, then I don't have to look at any of the long trades. So it's so I just load the template. I can do another one, template, load. I'll take the one I'm looking at right now. We're gonna look at this afternoon with the let's see, the template, get up here. Here it is. The one we're looking at today, the strategy. It's when using the trigger lines is when the two lines cross bearish. If this was the day I'm looking at, nope, no trade valid. The two lines didn't cross. That's one. I would do the same thing on each of the five currencies. Line didn't cross, nothing's valid. Next day, nope, line didn't cross today, nothing's valid. Nope, line didn't cross today, nothing's valid. Oh, hey, the line crossed. We have a valid trade. It takes me that long to do a review. When I pull this template up, I know what strategy I'm looking at. I'm just looking for two lines crossing, and if two lines didn't cross, then there's nothing else to do. If two lines did cross, then now I spend more time going deeper and looking at the plan in more detail for all the individual things that need to be valid to confirm. But for the initial review, it's just very, very visual. The two lines cross or not. That's it. If two lines didn't cross, there's nothing valid. There's nothing to think about, nothing to consider. But if two lines did cross, then now I'm going to put more time into it. The actual review took literally seconds. But until I see the lines cross, then I stop and spend more time to fine tune. Okay, is this everything valid? Is the squeeze valid? Is this valid? The Bollinger Band, everything. Then I spend more time on it. But initially, I'm just looking for the two lines crossing, nothing else. All right. So the strategy we're looking at, some of you have seen this before. We call it the bear attack currency future sell. It's one of our strategies that we've had for a long, long time. We were using it on Forex for many years, and we just basically updated it slightly for use on currency futures. For those of you not that familiar with the currency futures, I'm going to switch over. I'm going to change the share. And let's talk about currency futures just a little bit. Let's see. There we are, share. Okay. So here's our website. I put the link into the chat window for the handouts. So the handouts are right here. Previous historical trades are in other handouts here. And I'm going to go over, this is on Schwab. And these are the currency futures which are available. Okay, we just trade Euro, Australian dollar, Canadian dollar, British pound, and Swiss franc. Okay, so these and euro. There it is also. And but one of the benefit of trading the currency futures is we have micro futures available. That is a big plus. It's 1/10 the size of the full size contract. And also one-tenth the size and also 1/10 the margin. So you only have to put up a couple $100 and we get 50 to 1, approximately 50 to 1 leverage. Let's say you were buying $100 stock, it would cost you $100. You might have 2 to 1 leverage, so it might cost you 50, but $100 stock costs $100. If that $100 stock was a future, you'd be putting up $2 because it's 50 to 1 leverage. So if you wanted to, it's the same as buying $100 stock, but not paying $100 for it. You're only paying $2 for the stock, but you are getting the power, the full power of the $100 stock, but you only have to pay $2 for it. Okay. So that is the power of the 50 to 1 leverage of futures if you know what you're doing. And if you have your stop losses in place, which protect you. Um, Futures can have, without a stop loss, you can wipe out your account with futures. That's why you always, always, always have to have a stop loss in place. There was one of the people who, I can't think of his name now, but he talked about working with clients who refused to use stop losses, and he would drop them as clients. Can't think of his name. Can't think of his name now, but he had said in one of our presentations, if he had clients that refused to use stop loss, he would drop them as clients because they're just going to wipe out their accounts, and you can't work with someone who's going to do that. So you got to have stop losses because that's what protects you when you're trading futures, or else you can literally, I've been there, done that. I've wiped out my accounts with futures. It's not nice when you get a margin call. You wake up in the morning and there's a first email in your account says margin call in the subject line, and it's like you have no money, you have like negative money in your account. Please wire us additional funds immediately, or else we will have to take action to liquidate positions in your account. And you can't do ACH. They literally mean wire the money immediately. Um, so means you have gone negative and you're about to owe them, and you are owing them money. So you don't want to get a margin call. You don't want your account wiped out overnight. This is what it happens. So always, always, always have a stop loss in place to protect your risk, to limit your risk. But these are the futures. And if you have any questions along the way, just go ahead and ask it. Or if you raise your hand, I won't see it. Just type it in the chat window, or just unmute and ask a question, anything you want as we go along. All right. So but we only trade the currencies for the micro futures, and we also trade the indices with the micro futures, 1/10 the size of the index. So it might, trading like the NASDAQ, it costs 20 something $1,000 for margin on one of the contracts for the E-mini NASDAQ. But for the micro version, it's $2,000. So that's how much margin you got to put up. On the currencies, you may have to put up 2,000 something dollars to trade one of the currency futures, but for the micros, only 200 something dollars. So it works out much, much better. I think it was lost to share. Sharing not turned on. Okay. In a second. Get the share back. Okay. You should be seeing the back to the chart now. All right, does anyone not familiar with how ticks increment on currency futures with the tick values and the decimal places? Is anyone not familiar with that? Anyone not familiar with that?
I'm not familiar with it.
Okay, so take a look at the data box, Connie. This is Australian dollar, and we always, so with the price, open, high, low, and close, the regular stuff you're familiar with, it's four decimal places. For Australian dollar micro contracts, when we look at the fourth decimal place, that's a tick. So if this
Okay.
went from 6764 to 0.6765,
Uh-huh.
it means it went up one tick.
Hmm.
If it goes from 0.6764 to 0.6774, it went up 10 ticks.
Okay.
Each tick on the micro Aussie is $1. If you were doing the full size contract, each tick is $10. All right. So knowing that each tick is $1, Connie, please pull out. You have a calculator available?
Yeah.
Okay, because I'm going to have you answer the questions since you're the one who's new to the futures. The other people,
Oh, wait a minute. Oh, yeah, here it is.
other people, they have done this before, so I'll put you through a little
Okay.
live quiz here, so to speak. All right, so when we see this bearish cross, we know we have upper 80 something to low 90 something percent probability of this market going lower. So a certain number of ticks. So our entry for this, so we get this move here, two lines cross. We're going to look in our trading plan, the same type of trading plan you're familiar with, Connie, and there's going to be stats that show for when this is valid, for a certain size target, a certain win-loss percentage. This one is 80 something percent wins. So our entry for this trade will be 10 ticks below the low of this day. Unlike the options where we get in at or above the next day's open, with the
Hmm.
futures, we have to get in when the market's actually going lower. So
Okay.
we don't jump into a futures deal if the market's going up. We only jump in if it's actually going down in our direction.
Hmm.
Okay, so the low this day is 0.6792. Write that down, 0.6792. What is 10 ticks below that value? Point what?
0.6 eight 6782.
Correct. So that's going to be the entry price. So ENTRY equals 0.6782. Keep all these numbers because we're going to need them again. So entry is 0.6782. Our
Oh,
stop loss will be 10 ticks above the high of these 2 days, the highest high. So the high of these 2 days is 0.6894. What is 10 ticks above 0.6894?
uh, um, 6904.
Correct. So our stop loss equals 0.6904. So we have an entry and we have our stop loss. Now we're going to take a target size. We have in the trading plan, you're going to see 5 different ways of creating a target. So we're going to take one of the in-between values of 45%. So what is the difference between the stop loss? So what is 0.6904 minus 0.6782? What's that value? The difference between the
Six
entry and
seven what? Six seven
point
what?
0.67, excuse me, 0.6904 minus 0.6782. What's that value?
Oh, let me get my computer because
Yeah,
I
0.6904 minus
six
0.6782.
904 minus
0.6782.
6782.
Yep.
Oh hell. I just pressed the wrong key. Um,
So you see it in the chat window, 0.6904 minus 0.6782.
oh come on.
6904 minus 6782. And that will tell us how big our stop loss is.
6782
Yep.
equals. Well, that's wrong.
No, what?
Okay. My computer sometimes. Hold on one second. Six
Okay.
nine zero four
Yep.
minus 6782
Yep.
equals 122.
Okay. The diff stop value is, and if you put a point in there, it's 0.0122,
Mhm.
which is equal to 122 ticks.
Okay. All right. I got it.
Okay. So
Uh-huh.
that's how big our stop loss is on one contract.
Uh-huh.
If every tick is worth $1, what's your risk with 122 ticks? How many dollars is that?
$122. Huh?
There you go. If you want to risk $500 on a trade, how many contracts can you get?
Uh, 4.
There you go. All right. You now know more than most futures traders know.
That is pitiful. Okay. Because I know nothing.
People just sort of wing it and they. All right. So now we're going. So you know how big the stop loss is, 122 ticks.
Mhm.
We're going to make our first target 45% of that. That's going to be on our trading plan. You'll see the stats for that.
Mhm.
What's 45% of 122?
Times 0.45 equals 5490. Point, wait a minute. Point zero zero five. What is that?
Or 0.005 what?
549.
0.054?
Yeah. So, but since it's 9, is it? Do I uh, roll roll up to?
No, you're fine. That's
Okay.
so 122, and you did 45% is 54. You mean 54.9?
Yeah.
Okay, we can make it 54.
Okay.
First target equals 54 ticks.
Hmm.
That's how big your first target is.
Okay.
We're using a 45% first target. We have different values for targets, and you pick the ones you want because of different profit and losses and that type of thing that's in the plan. So we provide a lot of information in the plan for what you want to actually do to make money
Uh-huh.
and what faces your personality, fits your personality. So you have your entry, your stop loss, you know your risk, and you know your first target is how big your first target is. So what we would do when we see this become valid, um, we would place an order after the close, meaning or after the open. The market closes at 2 p.m. Pacific time, opens at 3 p.m. Pacific time. So sometime after 3 p.m. Pacific, we place an order. Let's say you're going to risk $500 and you're going to trade your 4 contracts, okay? You're going to sell stop. You're going to place an order to sell. An order type is a sell stop. 4 contracts at your entry price of 0.6782. So what will happen? Your first part of your order, you will be stopped into a trade. when I say stopped into a trade, it means if the market goes down to a certain value, it triggers a stop, and that actually triggers an entry order to sell and establish a short position. If you're going to buy stop, if the market goes up above a certain level, it actually triggers a buy stop, a stop entry to stop you into the trade. So with futures, you can be stopped into a position or stopped out of a position. Okay. So that
Mm,
you'll hear that word used, stop, but it's not always stop loss. You can be stopped into a trade also. So this is
hmm
the entry to stop you into the trade. So market will go down and it has 2 days to be filled. It can be filled anytime in the next 2 days. And in this case, it got filled the very next day. It went down the next day. Sometime during the day, it got filled. When it went down and got filled, it automatically creates the order for the stop loss and first target. So we know our stop loss is 10 ticks up here, and we know our entry was down here. We know how big our target is 54 ticks, and we know our
hmm
entry was 0.6782. So what is 0.6782 minus 0.0054? Excuse me. Yeah. So 0.6782 is the entry. Subtract from that 0.0054.
6782 minus
0.0054.
0.0054.
Yep.
And I think that I may have, yeah, I did something wrong. Okay.
Do it again.
Because I didn't I
0.6782.
didn't I didn't put the 0.6782
Yep.
minus 0.0054
Yep.
equals, oh, 0.67.
So
Zero
e
point,
it just equal even. It has to be
it,
point
it, it,
six.
would that be 00.0067
It would be
or just
point
67?
6782. 0.6782.
Okay, 0.67.
82 minus 0.0054.
Okay, so it's 0.67 is what I have.
You need is going to be a couple of decimal points missing there.
Okay, hold on one
So there's
second.
4 decimal places. So somewhere you're missing a number.
Point 6, 7, 8, 2
Minus
minus
0.0054.
0.0054 equals. It still comes out on my computer point.
It means your thing is rounding off to 2 decimal places.
Yeah.
I'll get a calculation. 0.6782, 0.0054. So it should be 0.6728.
Okay.
So your stuff is cutting you off.
Yeah, I have to fix it.
Okay.
To do
So
this, I have to fix it.
so my first target is 0.6728. So this order filled somewhere entry was 0.6782. So when the market got to right about here is when the order filled. That can happen anytime in the next 24 hours is when that happened. And that first day, it went as low as 0.6749. Our first target is 0.6728, so the target wasn't reached yet this first day. Let's look at the next day. The next day, it went as low as 0.6720, so that means our first target was hit. Okay. That is a 45% return on our money. Remember, our first target was 54 ticks, right?
Right.
What's 54 times 4?
Um, 216.
So you just made $216 in 2 days. That's a 45% return. If you wanted more, you could trail stops and that type of thing. It requires more time, effort, and work to trail stops. But if you go all in, all out, it's a 45% return on your money, and took 2 days to get that. This is the benefit of futures over options. You know exactly how much you're going to make or lose. With options, you don't know how much you're going to make or lose because of all the different variables in pricing.
Mm-hmm.
Okay, but as far as the calculations go, you just did all of them. There is no other calculation for this stuff. That's it. That's all the math there is. On every single trade, this is all you have to do. Okay? And what's your entry price? That's on the plan. What's your stop loss price? That's on the plan. What's the difference between those two values? That's how big your stop loss is, and then you see how many ticks that is, and what's a tick worth. You know how much dollars it is. Then you decide how many contracts you want, and you'll set up your first target, and you place your order and walk away. Your order is going to be entry. When that order fills, it automatically triggers the order with your stop loss and target. You don't have to touch any of that. It's all done automatically once you place the trade, and then you walk away, live your life. There's no decisions as to like option pricing. Is this too expensive? Nope, none of that stuff. It's very exact. So what you're seeing here is basically the culmination of many years of work, and this is where you eventually get to. So if you're trading and still have an account left after a couple of years, you'd probably end up here. Everyone starts out day trading, but what we found is that after a while, we realized, myself and Becky, that the same amount of money you can make or lose sitting in front of a computer for many, many hours every day trying to day trade instead of having a life or getting other stuff done is the same amount of money you can make or lose spending a couple of minutes a day swing trading, literally.
Mm.
So it is a different approach. Some people, for whatever reason, really like sitting there all day long, looking at things go up and down, trying to make it really complicated and do things in real time. And we've been there, done that. It is actually fun. It is kind of fun. Um, but if you want to actually, if you have a job or you have a family or you have other responsibilities, you just can't do that for the long term. At some point in time, you're either going to stop trading or you're going to have to find a different way and evolve. And this is our evolution. This
Mm.
is probably represents 95% of my trades are now just like this, with the currency futures, with the other 5% still being options. They're time for options and the time for futures. Right now, it's my time for options and futures actually because it's October, November timeframe, so I'm doing both. But for December, it's going to be all options, and for January, it's back to futures.
Mm.
The process is me working with you, Connie. That's the process. Because I know you asked the
Okay.
question. That's just me working with you. That's the process,
Okay.
and you learn how to do it, and then you just get it done. And I emailed this out. I'm not sure if you're on a list further. I don't think you're on the list, but I email out every afternoon the trade signals for the currency futures, usually between 2 o'clock and 4 or 5 o'clock. I email them out on most days, except sometimes I'm not around, but in most days between 2 and 5. And then you can confirm that, look at the charts, confirm with what you find, and then place the trade.
Okay.
All right, and you can risk as little as $100-something or all the way up to whatever amount you want. So even if you have a small account, five, $10,000, you can trade the currency futures very effectively. So I'm going to
Okay.
go through a scenario, a couple. Some of you have seen this before, but I'm going to go through it because we have a couple of new people still on the Zoom meeting, and some people will see it later on. But how money is actually made and looking at the big picture, I want to make sure people really understand how that money is made and lost. So I'd asked Becky to put this together a while ago to help people who are current coaching clients, future coaching clients. You should be seeing a spreadsheet now. And it's every trade that was valid on the currency future since 2019. The good, the bad, the ugly, the great, everything is here because you have to understand how this stuff works, profit and loss wise, to really appreciate it and not get scared and back off because you see a couple of losses happen. So we went with this assumes a 25% account, 25K account, and we're risking 4% of the account per trade. Max risk, 2 to 4%. Not more than that, because once you start getting more than that, you might end up over margining your account. And then you get a margin call. Okay, so you don't want them in a situation where you're over margin. So 2% to 4% is absolute max. This assumes a 4% account risk. This could be $100,000 account. This could be a $10,000 account. This could be a $5,000 account. This could be $1 million account. It doesn't matter. We're risking 4% on each one of these trades. And we going with worst case scenario. Remember I said we have 5 different targets. Those 5 different targets give you different percent returns. These are the worst case scenario. So that's what we always do, is show you the worst case scenario. So if you have risking $1,000, it's never going to be exactly 1,000, but it's going to be in the neighborhood. It could be plus or minus, but for the presentation, we made everything 1,000. So you see how the numbers work out. But in real life, it's going to be maybe 1,100 or 900 something, but it's going to be in that neighborhood of what we're risking. So if you see 429, it means it's a 42% return, 34% return, that type of thing, 30% return, worst case scenario. In real life, it averages out about 40-something% return per trade. So January 2019, start off with the year with a loss and a couple of wins. These are the first targets only. We can't back test beyond first target because there's intraday things, but we can tell you what if it'll hit the first target or not. So everything is based on getting to the first target and getting out. If you want to go beyond the first target, there are many ways of doing that. But the one way we can back test and be valid and verify is first target. So this is the kind of month where you think you're doing okay, and then at the end of the month, you take a couple of losses and get discouraged because you gave back all the money you made and then lost some. If you had started this program in this month, here's where a lot of people just stop trading because they're like, I just lost all my money. This isn't working. And you can't do that. You really have to understand the big picture, not just what's right there in front of you, but the big picture of profit and loss, and know that you're going to have at least 2 or 3 losing months every year. It's just a given. So you have to keep trading, following the plan. The next month, you had a couple of wins, and it literally negated the losing month. The next month, now with the futures, it's not about quantity of trades. The longer you trade, the better you get, the more professional you approach trading. You realize you don't need a lot of trades, you need quality trades. It's a big difference. When we starting out, we want to play, we want to trade, we want to trade, we want to trade everything. No, quality trades, and the money adds up really fast. Like I said, no, doesn't matter the size account. We do everything based on 25 grand. I think a lot of people have a 25 grand account in that neighborhood. So I want to show you what this would be like. Some people who have bigger accounts, great. It's easy. Then you can trade more. If you have a smaller account, same trade, exact same trades. All right. So we go on March, nice percent return. Almost a break-even month for April. June, September, March, and December usually the least amount of trades because of rollover and quadruple witching. We don't trade during that time. May, very nice month, no losses, 5% return on the account. And we'll show you this all keeps adding up. July, 5.7%, 2%, break-even month. October, couple of losses, couple of wins. Consistency, and look at end of the year now. It's a 40% return for the year on the account. If this was a $100,000 account, you would have made $40,000. Okay? $1 million account is $400,000. A 10 grand account is $4,000. You will realistically, you won't be in every single trade. Let's get real now, but you can get a feel for what's possible with consistency and following a plan. Okay? If you're only risking 2% of the account per trade, then this would be 20%. at 4% account risk per trade. Here's where you get to this. You can't keep doubling your, you can only go so far with percent risk per trade because of margin. You try to go to, well, I want to do, well, I want to get 80% return, so I'll risk 8% of the account. You're gonna get over margined and screw yourself up. So keep that in mind. You don't want to be over margined, but this works really, really well here.
Eversley, this is
Yep.
Dustin.
Hey, Dustin.
Hey, so did you not find any valid trades for December, or did you just not trade for December of that
I'll
year?
see on the trading plan, no trades in December.
Yeah.
There's literally only one good week of trading in December, and then everything goes to hell because of end of year market manipulation and everything else, and rollover and quadruple witching, and you'll if you put all the trades in, you're just going to see a bunch of losses happen in December. We have
Okay.
very few Decembers that are winning, that are winners. That we just had no reason to trade futures in December.
Okay. Yeah, we talked about not trading in December, but yeah, I didn't know if it was per the plan or
That's per plan.
yeah.
We trade options are fine because we don't have to worry about hitting the stop loss. We can absorb all the swings and everything else, and the volatility, but not futures in December. So we just don't trade. That immediately raised our overall P&L because we'd always have we'd be at 50% return and then we lose 10% in December
Right.
for
That's
no
what we
good
were
reason.
talking about.
Yeah.
Okay,
So
thank you.
that's why it's good to have all these numbers put together so we can look at it and make decisions. So, Becky is the one who does all the spreadsheets and maintains all these numbers, just so you know. What's funny, Dustin, were you the one who thought Becky was an AI I was working with to do all the calculations?
Yeah, I did. It
He
sounded like a computer program.
didn't
Yeah.
realize Becky was a real person. That was funny. I told her that. He's like, yeah. So I was saying, well, Becky, ask Becky to do this, and she gives me all these spreadsheets.
Yeah, she sounded like an algorithm that back tested all your strategies.
We always joke. I told her if she was a superhero, her name would be Spreadsheet.
Yeah, yeah,
And that should be her Halloween costume. It's a big Excel spreadsheet because she's really good at it. And she's in the managing data. But that is what she does for a living, is manage data. That's the thing.
right on.
All right. So 2020, COVID year. Best year of trading ever for futures and options. Best year of trading. Big swings in the markets. We want volatility. We want the markets moving, and April was just one of those great months. Every month was, we just had a great year of trading. And this is all the monthly returns. It all had the same strategies. Losing October, big deal. You make it back up the next month and then some, just by being consistent with your trades. If you're only trading 5 currencies, you might have multiple trades on the same currency going on at the same time. You place as many trades as you can. Like I see, we see here 49, it means a 49% return, 40% return. Okay, 34%. It adds up really, really fast. As long as you're consistent. When the year is over, 65% return on account. That was during COVID year. This was even one of my best years because these numbers were comparable to options also. It was just one of those great years for options and futures. And I didn't have a whole lot to do that year, so I was even more focused on my trading, more focused than ever because there was nothing else to do. Everything was shut down. So literally my only income. 2021, same type of numbers. We get right back into it. Um, we do average 80 something percent wins. This is a lot of trades for April. Came on to basically break even. That's why you do. You make some money, you give money back, and at the end of the month, it kind of sucks. But once you have the big pick, you know you're going to make it back the next month, and you just keep it going. End of the year, 60% return on the account. Once again, it is a 100 grand account, that's $60,000. $1 billion account, that's $600,000. $10,000 account, that's $6,000. Okay, because with the micros, you can trade size whatever you want it to, as long as you're very consistent. The money adds up. You take your losses when they happen. 2022, we had 2 back-to-back losing months. This is what makes people want to stop trading. Let's say you started a program with me this month, you finished a month out losses, and I talk you into it's okay. Next month they start out winning again, then bam, loss after loss after loss. And then up here, you want to stop because you feel the emotion of the losses. You want to quit. But here's where I remind you of the big picture, and I have these like pep talks with coaching clients for this type of situation. When I don't hear from people for a while, I know they had a couple of losses. I don't hear from them for a while. I know they've become discouraged or disbelievers, so to speak. And I got to talk to them. It's like I'm checking on them, and then they tell me, "Yeah, we took a bunch of losses," and then they might even admit to me, "Well, we might have over leveraged." They become too confident and start trading really, really big size too early, and it's like, no, every trade's the same. Don't over leverage, don't go one disproportionately, and you got to be smart. And if you're smart and approach this in a very business-like manner, these numbers just work out really, really well because it's predictable income with the futures. Great April again. And that 1 month negated, this 1 month of profits negated 2 months of losses. So when I said before, expect 2 to 3 months of losses each year, well, those 2 to 3 months of losses will be negated by 2 to 3 months of winning trades. The other 9 or 10 months of trading will really represents your net profit. So if you have 2 months of losses and 2 months of wins that negate each other, that leaves you with 8 months. Those 8 months will be your profits for the year. Okay, so you always have to keep trading and end the year, and then you look at your profit and loss, but it's a very consistent, nice return. End of the year, it's a 44% return. If you're risking 2% of the account per trade, it's a 22% return. Because this is all risking 4%. 2023, same type of thing. And we're up to a 59% return. And for this year so far, we've had an amazing year so far. And this was the 1 month we really had any kind of significant negative was September. And there's also some trades in here that are not recommended because there's rollover or quadruple witching. So for those people who took the recommendations, they didn't see the losses, but they were all valid trades. But some trades are not recommended because of timing. And here we are in October for this month. So far, it's been a great month so far. All right. And here we are for the year at 40-something% overall. Remember, the average retail trader / investor makes about a 10% return per year on their account. Okay. We could walk away right now and say we're done for the year and we've outperformed the average retail trader / investor 4 times over. But we're going to trade right through the end of November and then shut it down on futures until January. We'll still be trading options. Okay, but this is how we really just became very consistent by using the currency futures. The index futures are okay too, but they don't have as high a percent win rate as the currency futures. And they also require a lot more capital to trade. So people who have starting out with smaller accounts, it's really good to be able to trade the full strategy without any limitations or hesitation. So that's why it works really, really well for the currency futures. And it's been the most consistent thing we've done. We've done this forever. Even back when in my previous meetup, I talked about our biggest loss ever. If we had followed our plans back then, it would have been our biggest win ever, but we just didn't follow the plan. It was our own fault, not because of the strategy, because we let certain emotions get into our head and we didn't follow our own plan. And we took a huge loss when it should have been the biggest single win ever for us. We ended up having the biggest single loss ever for us. The plan works when we follow it. Every big loss I've ever had, ever, when we look back, both myself and Becky, when we look back and saw if we'd only followed our plan, we would have made our money back like that a week or two later. And so that's why when anyone tells me, well, I want to try this, I'm like, no, stay on plan. There are times to take some of the, let's say you've been trading on plan for 5, 6 months, you've made some good money. Reward yourself. Take maybe 10% of that money you made and play. Do something else with it. Play a little bit. Try some other trade, some other strategy, but don't just go crazy. If you made an extra $7,000, maybe take 1,000 of that at risk to try some other strategy, something else. But you don't just do stuff randomly, arbitrarily. But still reward yourself for making money. So it's no problem trying something different. That's okay. But wait till you make some good money first, and then take a part of that money you made and put that at risk with a stop loss. Try a different strategy. That's okay with a stop loss. But you keep your main money that you've made, put that aside, take a part of it to play. All right. Are there any particular questions? Because like I said, except for maybe one person in the meetup today, everyone is a coaching client. So you all know, have seen the strategy. So you have any questions? All right. So Bill, once you have determined that the valid trade is either bullish or bearish, how do you narrow down the particular bullish or bearish strategy to use? It's all in the trading plan. We trade all of them. We trade every strategy, whatever is valid. If the strategy is valid, that's the strategy that's valid. Just like if we see the bearish cross, we look through every strategy every day. Every strategy every day. If this is the one that's valid today, then that's what we're trading. And we look at it and we look at the plan and say, hey, we got several different scenarios here. This one is one of the targets is 78% wins. Nope, too low because our minimum is 80%. Another one is 81% wins. Another one is 88% wins. Another one is 89% wins because there are at least 5 different scenarios. Anything over 80% is tradable. You pick the one you want. On the plan, let me do another change to share again. On the trading plan, you'll see the setup, trigger, trade manager. The setup is visually what you look for, the bearish cross. Trigger is the confirmation, the detaily stuff. But what you see on the plan for every currency is the win-loss percentage and the P&L. So for the 5 different targeting scenarios, you're going to have 5 different win percentages. You pick the one you want is over 80%. And or you can look at the P&L. 3.2 means since 2003, if you trade this strategy, every time it became valid on Australian dollar, then you would have made $3.20 every $1 which you lost. So you would have had a 3-to-1 return on your money trading Australian dollar every time this strategy was valid. Is that clear, Bill, or do you need more clarification? You trade whichever strategy is valid. And feel free to unmute if you just want to talk, if you want. So you can do that also. All right. Any more questions on anything? Anything was totally open here, so whatever you need, we'll take a look at.
This is Dustin.
Yeah.
Hey, so I noticed too, like this month, I've only seen currency trades. I haven't seen like an index trade since I've started coaching with you.
Nothing's been valid.
None have been valid. Okay. I mean, we haven't really gone over a lot of those strategies yet either.
Yeah, nothing has been valid. So when you see
Okay.
it valid on the email, that means we're gonna be talking that afternoon, basically, so.
Okay.
But yeah, it's nothing's been bad. I thought maybe we would have gotten a sell signal this past week, but markets pull back,
Yeah.
but not enough. I'm gonna switch to share. I'll show you what I'm looking for a sell. We just haven't gone over it yet because it wasn't a priority at the time. I'm changing it, so I'm gonna pull up, let's say, the S&P futures, and I'm gonna change the template load, stochastics futures.
Stochastics
Okay,
futures. Yeah. Okay.
this S&P becomes a sell when it goes below this level.
Right.
I think we might have had one getting close. Let's take a look at Russell. Russell's closer. One push lower, and we got to close below this level. We're going to have a sell on Russell.
What's the name of that strategy?
This one is the 14.8 trig extension sell.
14.8.
14.8 trig extension. This is one of our best ever Forex strategies, which we just adapted to the other markets, but close below this level here with a red candle. Let's take a look at YM.
Trig extension. Okay.
Well, 14.8 trig extension. So when this is actually going up, so we got nothing there. And the market is going to chop sideways until after the elections. Let's get real now.
Okay.
Okay.
Well, yeah, the last two trades I entered, we got stopped out of. So I mean, yeah,
Okay, so
everything's going sideways.
this would have been a sell. Okay, this would have been a sell on the plan because
Right.
it goes below this level. But if you take a look at the stochastics value down here,
Yeah.
it's too low.
Okay, that's part of the trade criteria for trade.
Yeah.
Okay.
So that stochastics value has to be above a higher level. So it's below the level that we find acceptable
Okay.
for a sell. It's telling us more like expect more of a bounce up than us, and this is just basically pull back to the uptrending 40, right within that channel. So, but this would have been a sell if the stochastics were valid, but it's not. Then we'd be putting in a sell order for this weekend, but we're not doing that. It might still go lower. It could go lower, but not per plan. Per plan is a pass.
For plan, it's a pass now.
It's a
Okay.
pass. Yep. But it would have been a sell.
If tomorrow the stochastics value
No,
is proper, no. Okay.
no, it has to be valid on the day it closes below.
That day, no day after.
That's
Okay.
the only day it can be valid. It was not valid. We just passed it. There are so many other potential trades. We
Yeah.
just wait for what's good. I go back to the old, probably from the first week, learning from John Carter and Hubert Centers way back in 2006, I think, is when we started following them. You To use their words, even you keep your powder dry and just wait for your good trade setup.
I got you. Yeah.
That's it. You keep
Yeah.
your powder dry and just wait. When it's right, and then we capitalize on it. And that's the difference between the day trading mentality and certain types of mentality. You wait. You be patient, because when the trades come, they're going to come rapid fire. Okay,
Yeah.
we've already passed our sell signals, so we're basically waiting for stuff to turn up again.
Yeah. We're waiting on the uptrend
Yeah,
again.
we have exhausted off our cells and all the currencies. Everything's pushed lower. So if you want to those short trades, you just have to wait for the next set of signals. And I'd say in our last meetup, we talked about the overall market also. Pull up DIA. We talked about the overall market pulling back to the bottom of the channel. And it's kind of doing that now. This is the Dow.
Okay, good
Talked
job.
about a pullback to the bottom of the channel, which happens to be the uptrending 40.
Yeah.
And it's just doing exactly what we talked about at our last meetup. Is just pull back to the bottom of the channel. And I'm looking, so for our next set of buy signals, what I'm looking for, we might see some sells, but they've all been exhausted realistically. I'm just looking for the next time the market turns up. And we got all of our new buy signals. So that's what I'm, because remember, this time of year, the longs are really in place. So I'm just waiting for it to turn back up. Should be anytime, anywhere down here. It'll probably happen right after the elections or leading into it. Okay.
Yeah.
All right. So Chris, question. He asked me a question. How many different strategies do you monitor on an ongoing basis? Chris is asking how many strategies we monitor on an ongoing basis, and do we employ similar strategies for futures versus options? Do you dedicate effort developing new strategies? Okay. How many monitors do how many strategies do we monitor on an ongoing basis? For the options, 6 daily chart strategies. I think we just added 2 more. So actually 7 or 8 daily chart strategies for options. Each day, it's Becky's responsibility to go through all the option strategies to see what's valid. And we email those out in the evening. My responsibility is to go through the future strategies in the afternoon, and I email those out on the afternoon to all the coaching clients. And for the futures, we have about 4 or 5 strategies for index futures and about 10 or more for the currency futures. Okay. So if you take a look at the listing on the currency futures and look at the different names, that's how many we have. If you can just make a note, you'll get the recording a little bit later on. You just do a screenshot and I'll actually put it up for you. Change the screenshot. I'm answering questions as I'm doing that. So here's the share, and if you look for different names of different strategies, you can count and you can tell how many currencies future strategies we have. There's some representation of each of the names here. So you can kind of figure out, it's going to be at least 10 or so for the currency futures. Do I employ strategies versus options? The strategies for options versus futures, there's a difference. Options, we just buying calls and puts, so we don't care if the market goes way against us and back up. So we can just live through the market swings. Futures have to be very more specific, because we can't afford the market to swing against us because we'll be stopped out. So it's a different approach. With the 50-to-1 leverage of futures, we don't need a very big move to get a really big profit. So we look for smaller moves in the futures to give us really big returns. So we make use of our leverage. The bigger a move you look for, the less likely it'll get there before being stopped out. So to get our 80 to 90 something percent wins, we look for small moves with massive 50-to-1 leverage, and that's how we make our money. But it's a much smaller target than with options. Options, we need bigger moves to overcome time decay and that type of thing, and volatility. Do you dedicate effort to developing new strategy? That's an ongoing. I live for that. That's my thing. You'll ask Becky; she'll tell you that I spend at least 1 or 2 hours almost every day on looking at charts and fine-tuning things. And I said, right now, my energy is really spent on currency futures. How can we improve what we currently have? How can we make more money off what we have, and things that I look back at stuff I looked at 15 years ago, bring it back to life now. It's like, because I have new knowledge. That's an ongoing thing. This is my relaxed time, is doing technical analysis. I love technical analysis. It keeps me mentally active. This is, for me, problem solving. I can look at a chart and see things that other people can't see. I usually use the association with the movie Predator with Arnold Schwarzenegger. When the Predator puts on the helmet and with the visors and stuff and changes different filters, the Predator can see different creatures and patterns and stuff. that he's after. I'm the exact same way when it comes to trading. And looking at technical analysis. I can see patterns, and I've probably learned about 30 to 40 different methods of technical analysis, at least 30 to 40 different methods of technical analysis. And when I look at a chart, I'm mentally superimposing all those methods on the chart in my mind, seeing, okay, let's try this, okay, and then I might be combining concepts. I might be combining some GAN with some Fibonacci in my head and some other technical analysis close above, but it's all going in, and then that's how I see the trades. And then once I get a plan, then I've documented, then I contact Becky, and then we will go through one whole chart over 20 something years and then see if the numbers make sense. If we traded this strategy that I just came up with in my head, but once we put it all down, if we traded it, what would it look like? Is it tradable? Does it have the win-loss percentage we expect? We have certain minimum expectations, but that's how I think, and I'm always developing new strategies. You all can't see this, but he emailed me directly. Will you defer from entering a trade when there's a pending event like the election? No, we do real market volatility is how we make money. When the market's chopping sideways, that's just nothing. That is literally why we do technical analysis, because we don't arbitrarily pick one election in one country or one report coming out. There are reports coming out every day in every country that move the markets globally. There are reports coming out, the elections everywhere, bombings everywhere, oil this going there, countries being overthrown. Stuff's happening every day, everywhere that affects the markets. Who cares? This is technical analysis. It's all built into the charts. No matter what happens today, tomorrow, the next day, it will all be in the open, high, low, and close of that day. So that's why we do technical, and it's nice, it's fun to look at CNBC and all those things and Fox News and Bloomberg and see all that stuff, but it has no impact on our decision making, none at all when it comes to technical. But it's just fun it's fun to know, but it doesn't impact our decision making. All right. So I'm gonna switch chairs again.
Can you hear me?
Yep.
Oh,
Hey, Bill.
this is Bill. I just now got my microphone to work.
Okay, cool.
All right, that's all I need. Oh, I do have a question.
Yep.
I tried to enter a lot of ETFs into the Ninja Trader platform, and
Okay.
it wouldn't allow me to enter like the major ones, like the Dow Jones and the SPX.
Are you using 8 or 7?
7?
Email me later on. We'll set up a time to have a Zoom meeting, and I'll help you with that, because the ETFs are a little bit different. You have to enter some other stuff to make it work.
Oh, okay.
All right. So
All right.
email me later on, and we'll set. You're on the East Coast. You're back on the East Coast, or you're still out
Yeah,
here?
I'm still here on the East
Okay.
Coast.
So email me. If you're available, maybe Monday evening, maybe.
Okay.
Probably after 8:30 or Monday mid-afternoon sometime. One of those
Your
two.
time
But
or my time?
say it again.
Your time or my time?
Pacific time
Okay.
after 8:30 Pacific, assuming you're on the West Coast right now.
I'm on the East Coast.
You're back on the East. Okay. So tomorrow to how about 5 p.m. your time tomorrow?
Okay.
Email me to remind me, and I'll set up the Zoom meeting for 5 p.m. your time tomorrow.
Okay. All right.
All
Thank
right,
you.
cool. All right. Let's see. All righty. So if anyone's interested in working with me on this stuff, I did for the bear attack, I gave all the valid trades. So if all of you want to set up stuff on your own to see if you can recreate that trade setup I showed for the bear attack with the 2 lines crossing down, here are all the valid trades on Aussie dollar and euro over the last 21 years. This is the win-loss percentage. And remember, all you got to do is 80. If you make a realistically average about 40% return per winning trade. So if you do some quick math, assume $1,000 risk per trade. For every wins is a plus 400. Every loss, it's minus 1,000. And you do that quick math just like that, right? That's how we trade. So for every we average about a 40% return on wins. So and we average about realistically overall, we average about 85% wins overall. So for every 20 trades, we're gonna have 3 losses. That's 85%. That's minus $1,000. And for every 17 trades, we average plus 400. So 17 times 400 is what we make, and 3 times 1,000 is what we lose. That's how we trade. Okay, do that math. We lose 3 times 1,000. That's 3,000 lost, and we make 17 times 400. That's on average. So 400 enter 17. That's $6,800 made, $3,000 lost, net $3,800. That's how we trade. Simple. That's trading. Trading is wins and losses, not just making money. We have to factor in the losses and make sure we're going to lose and make sure we're going to make significantly more than we're going to lose. And as long as you have that plan, you can execute that plan. Numbers work out nicely. If you want to work with me on this, this is what I charge for futures. It's $1,745. Anyone for the meetup, it's going to be $200 off. Let me know by Wednesday, so $1,545. I work with everybody one-on-one. I don't do group sessions for coaching. All the details are here. I'm going to put into the chat window one more time where the handouts are. I'll do it for, let me change that to everybody. And so that's where the handouts are. But what you see with what I show with the futures is exactly what it is. It's not, it's straightforward. It's very technical strategies. I have to show you, it's not stuff you can read and follow on your own. It's stuff I have to explain. The trading plans, if you just try to read it on your own, it's like way too complicated. It doesn't make any sense. But once I show you, I mean, all that's written, it just means look for those 2 lines crossing. Yes. Closing above or below a certain level. Yes. So once I show you, then it makes sense. Then you can read the plan and be able to follow along. And then, but I do all of that one-on-one, whether it's in person or in Zoom. I prefer in person when possible, like Dustin. Dustin lives locally, so I've been meeting with him locally, and now that Bill used to live locally, but now he's moved to the East Coast, so we do stuff via Zoom. And if you want to do both options and futures, I'll give you a $500 discount off this price if you want to do both options and futures. Okay, just let me know and we'll set stuff up and we'll get it going. But all my information is here. We're gonna have one more meeting this year, one more meetup, probably on options, probably maybe the second week of November, maybe just that last week before Thanksgiving. That might be the end of it for this year, and then we kind of go from there. All right. Unless we have any questions. Do we have any questions?
Okay, let's see. Mute.
What do you got for us, Olga?
Okay, yeah, I was just, did you see my message to call me?
Yeah, I saw it.
Okay.
That's the same phone number that you had for a while, right?
Yes, I have a cell phone, but this one, when you call this one, you can leave a message at this one, and you also can, my cell phone will ring at the same time.
You know, make sure to copy that number other people can't see.
Okay.
Okay, cool. Got it. All right, so we'll leave it off at a stopping point right now. Email me, call me if you want to work with me on coaching, and we'll get us going as soon as possible. Let me know by Wednesday if you want the discount, and then we can go from there. And I'll send a recording of this out a little bit later this evening also. Otherwise, until our next meetup and our final one for the year in about 2 or 3 weeks, y'all have a good weekend. I'm gonna watch the Niner game in a couple hours and chill out for the rest of the day.
All right, have a good one.
Talk to y'all soon.